Hey there, fellow traders. Welcome back to ForexCracked. Today we're diving into one of the most powerful tools in Forex trading, leverage. It can be your best friend or your worst enemy, depending on how you use it. So let's break down the benefits and risks of Forex leverage. First, let's start with the basics. What is leverage in Forex trading? Simply put, leverage allows you to control a large position with a relatively small amount of capital. It's expressed as a ratio, like 50, 1, 100, 1, or even 501. For example, with 100, 1 leverage, you can control a $100,000 position with just $1,000. Sounds great, right? Well, let's look at the benefits. 1 increased buying power leverage amplifies your buying power, allowing you to trade larger positions than your account balance would otherwise permit. This can potentially lead to higher profits. 2. Flexibility. With leverage, you can take advantage of small price movements in the Forex market. This is especially useful in a market that doesn't move as drastically as stocks or cryptocurrencies. 3. Efficient use of capital leverage allows you to use your capital more efficiently. You don't have to tie up a large portion of your funds in a single trade, freeing up capital for other opportunities. But like all powerful tools, leverage comes with risks. It's crucial to understand these risks to avoid devastating losses. Risks of Forex leverage 1. Amplified losses. Just as leverage can amplify profits, it can also amplify losses. A small adverse move in the market can lead to significant losses, sometimes exceeding your initial investment. 2. Margin calls. If your trade goes against you, your broker may issue a margin call, requiring you to deposit more funds to maintain your position. Failing to do so can result in your position being liquidated at a loss. 3. Psychological pressure. Trading with leverage can be stressful. The potential for large gains or losses can lead to emotional decision-making, which is often detrimental to trading performance. So, how can you use leverage wisely? Tips for using leverage wisely. 1. Start small. Begin with lower leverage ratios to get comfortable with how it affects your trades. As you gain experience, you can gradually increase your leverage. 2. Use stop-loss orders. Always use stop-loss orders to limit potential losses. This helps protect your capital and keeps your emotions in check. 3. Educate yourself continuously. Educate yourself about the Forex market and trading strategies. Knowledge is your best defense against the risks of leverage. 4. Stay disciplined. Stick to your trading plan and avoid impulsive decisions. Discipline is key to managing leverage effectively. Leverage can be a powerful tool in Forex trading when used wisely. It offers great potential for profits but comes with significant risks. By understanding both the benefits and the dangers, you can make informed decisions and trade with confidence. If you found this video helpful, give it a thumbs up, and don't forget to subscribe to ForexCracked for more trading tips and strategies. Happy trading, and see you in the next video.